Alright guys, we are live. The weirdest thing happened right when I started the stream. I tried to upload my thumbnail. It was like error, your thumbnail could not be processed, and then all of a sudden I tried it again and it worked. So it's a little weird, but we are live. We are ready to trade. Let's talk about what's going on. Hope you guys are doing good. Today is Thursday, September 26th, and we have unemployment claims that already came out actually at 8:30. So let's see what happened at 8:30 here. So this, honestly, I would consider this a data low, right? So let's bring this over. Maybe mark this out as like a data low. But yeah, hope you guys are all doing good. We're gonna go over the daily profile in a second. So data low. Yesterday was pretty sweet though. I called out pretty much exactly what was gonna happen, almost exactly. So that was pretty cool. But I didn't get a good trade in, which is annoying. But hopefully we can get a good trade in today, and we can change that. So, but even if we don't, as always, we're just focusing on getting better and watching the market every single day, focusing on improving ourselves, focusing on making good trades, and whatever else happens is whatever else. Like, if we cannot control the outcome of our trades, so we have to understand that, right? If we can't control the outcome of our trades, then we just have to focus on making good trades, and that's all we can do. So let's take a look at daily profile. So we have Asia from 20 until midnight. So here's Asia. Then we had London from 2 until 5. Now our weekly objective was already hit. That monthly high was hit. But it's pretty cool that it was hit because we totally called that. We totally called that monthly high was going to get hit. So we have London like this. So this is interesting. So Asia is right here, London's right here. What kind of daily profile could this be? So the ones that T-Trades has pulled up are London reversal, New York manipulation. Let's look at both of these. So London reversal, Asia forms a range, London manipulates, New York distributes. Clearly it's, well, let's see. No, London would have already pushed into a key level, so it's not London reversal. But New York. Bullish New York manipulation. London forms a range, New York pushes into a key level, and then goes the opposite way. It could be this, guys. It could be this. And the other one it could be is New York continuation. But so I guess, is that the same or different than London reversal? I feel like it could be New York manipulation. So we're going to pull up New York manipulation, and we're going to look for a possible key level we could be tapping into, right? So we have London up here, New York pushing up here higher, and guys, we are actually already in this weekly imbalance. So see how we are in this weekly imbalance here. So I'm interested to see how price reacts here. Now, something I talked about in one of my weekly outlooks a long time ago is we have this weekly order block. And I'm curious how this mean threshold is going to hold price. So, I talked about this in one of my other videos in my weekly outlook from a long time ago. I said I wonder how this mean threshold is going to hold, because it's a very clear order block, right? And so it might just push through here, it might, but we'll just have to see. So now we are almost pushing into this mean threshold. I honestly don't know if this is gonna hold, right? I literally don't know. Because I don't have enough experience with mean thresholds to know like how well this is going to hold, right? I really don't know. It could just blast through because it looks so bullish. It could just blast through, but I want to draw this out anyways, just to mark it, because mean thresholds are a thing, you know? It could react here, so we're gonna mark it out. But anyway, to draw a mean threshold of an order block, you take the candle body and you mark the midpoint of the candle body right here. So once again, an order block is a final move up before a larger move down. Now it's also important to note that this is a breaker block. Now we have already pushed into the breaker block on the weekly time frame, right? We already pushed into it. And so now it looks like we have moved past the breaker block. Like, unless it reacts off the end of the breaker block here, which it could. This could be the top for all I know. But we are definitely pushing very far into this breaker block. So we will see if it wants to hold here at this mean threshold at this weekly gap. And it honestly could, because think about it, right? Think about it from a trading, like, let's say this was the low time frame, right? What would this be? This would be a unicorn setup. Why? Because this is a breaker block overlapped with a fair value gap. So this is essentially a high time frame unicorn model, because breaker block, so high, low, higher high, lower low. So this is a breaker block, this red candle. Drag this over, this is the breaker. Breaker block. And then weekly. So essentially it's like right now we are pushing into this high time frame unicorn setup, right? Where it's a breaker block and a weekly fair value gap. So now that we kind of understand that on the high time frame, now I didn't talk about this in my weekly outlook because all I had lined up for my weekly outlook was, hey, we had this monthly previous high, monthly drawn liquidity. That's all I had looked at, right? And we could keep pushing through here. It might not hold this, but it's important to mark this out because this is how we get better, right? If price does react here, we'll know in the future, hey, this stuff, like this breaker block did hold, this breaker block did hold. You'll notice here, like this is a good example, right? This was a weekly breaker block, so low, high, lower, low, higher, high. What happened? We pushed into the weekly breaker block and continued higher. And then what happened when we came back down to the breaker block, right? So we'd already respected the breaker block. We pushed through it. So in general, like once this breaker was already respected, once we came back to it, we didn't necessarily go respect it. So could this be the drawn liquidity, this 3-month high? Maybe. And this is where we get better at trading, right? When we understand stuff like this, like is it still going to respect this breaker block because there's a fair value gap here, or is it going to push through because it already respected this breaker once, right? See this breaker? Pushed into it, pushed higher. Then the second time it came into it, it did not respect the breaker block. Let's pull up the chart zoomed in now a little bit. You can see this is also a daily imbalance, and coming in here on this daily order block, you can see this last daily order block held up not bad. I'm going to turn off the heater over here. Hang on. So we also want to look for equal highs and equal lows. So let's go down in time frame here. Now, I wonder if those equal highs and equal lows from yesterday are still left. What's going on here? Drawing, storage, maintenance. I don't know why it says that, but okay. I wonder if those equal lows are still there from yesterday. So yesterday I pointed out how we had equal lows. So we had this market maker buy model, but we had equal lows down here, and this was very concerning for me because I was like, we have equal lows down here. Like, yes, we had previous month's highs of drawn liquidity, and it was like somewhere in here, but I was concerned because there were equal lows. So now I'm curious, if we go down in time frame, are these equal lows still here? Not quite relatively equal because this one swept. But here we have relatively equal lows here. But you can see these are not super high probability because they're like very close together. Now we left relatively equal lows here. I think these are pretty good relatively equal lows because look. Are these relatively equal? Yes, look at that. Relatively equal lows at 20,232. 20,232. Relatively equal lows. So we're going to pull these over. And in all honesty, in my opinion, this is our draw on liquidity. So this is possibly where the market is seeking. Possibly take out Asia's low and London's low, right? So we're expecting essentially this kind of this mean threshold is the high time frame key level in this daily profile here, where we have London, what was it called? We looked at it just a second ago. New York manipulation, right? Just a second. Okay, I'm back. So we're possibly thinking this could be a bearish New York manipulation, right? Where we have London range, forms a range, New York hits a key level, and then we have distribution down to possibly take out London and Asia's lows. Now, let's get rid of this, whatever this giant box is, because it's not helpful. It was the breaker block we were talking about, right? We're in this weekly fair value gap. So it makes sense for us to have a pullback here because we're in this weekly fair value gap, right? We're in this daily fair value gap. And we are pushing up into possibly this daily order block. So maybe we want to mark this. Very possibly we want to mark this daily order block. It could be important. So we'll mark it. Maybe it wants to push up into this daily order block, right? It might want to keep going higher. I could see that. I could see us pushing even higher and going into this daily order block, right? Because price is bullish right now. But we have taken out previous month's highs already. So our previous month's highs draw on liquidity has been taken. Previous week's highs kind of too far down, so I don't think that's a good draw on liquidity. But these equal lows, guys, am I crazy? Or are these equal lows exactly the same as previous day's low? What the heck? Guys, these equal lows are almost exactly the same as previous day's low. No shot. No shot. They're the same. The previous day's low and the equal lows are the exact same. Guys, this is going to be such a good market recap today. What the heck? What? No way. They are the exact same. No way. They're the exact same. Previous day's low, guys. I cannot make this up. Previous day's low. Right here, 20,232. Okay, remember that. 20,232. No shot. No way. What? No way. No way. The equal lows and the previous day's low are the exact same level. The exact same level. What are the odds? Dude, what? No way. No way. What the heck? This is crazy. This is crazy. So I think we know what the draw on liquidity is. Equal lows and previous day's low are the exact same. They're the exact same. Oh, market opened, guys. Market opened. Dude, we're already dumping. So, like I said, equal lows, previous day's low seems to be the draw on liquidity. Now, we have to get our entry. Last time we did not get our entry. We need to find our entry. Our entry could be many different things. Our entry could be a breaker block. Our entry could be an order block. Our entry, as I try and have it always be, I try and stick to inverse fair value gaps. But with my confidence increasing in breaker blocks and order blocks, I'm starting to become okay with using breaker blocks and order blocks, especially because I understand how they work. Now, this is what we're looking at right now is a pretty standard silver bullet model where we sweep London's highs, right? We swept London's highs. We swept London's highs. Oh, we already took the data low, by the way. We just totally missed that one setup for life here, but you know what? That's fine. That's fine because we're gonna get a really good entry hopefully today. I really do hope we get a really good entry today. So let's talk about the possible silver bullet model that we have going on today. So we have London's highs here that got swept, right? We have London's highs that got swept. Now, okay, London's highs got swept. So now we need to figure out our entry, right? Our entry. Oh, were those equal lows? Oh my gosh, guys, those were equal lows. So, kind of. Guys, this is the draw on liquidity. This is where the market's going to go. This is where the market's going to go. Oh my gosh. Are we going to get a pullback? Can we please get a pullback? Okay. We're going to chill out a little bit here. So, we're going to get our entry, hopefully. We have this order block. But if we don't get an entry, we're not going to freak out. We're not going to freak out. We're going to be patient. And we are going to just take what the market presents to us. Now, for the silver bullet model to be valid, we need to enter between 10 and 11 o'clock, meaning we still have another 25 minutes before we even consider our entry. We don't want to enter for another 25 minutes to an hour and 25 minutes. So we have a lot of time, guys. We have a lot of time still. Now, there is this giant fair value gap. This giant fair value gap. And what is the biggest fair value gap in here? This 1 minute fair value gap. So this is the biggest fair value gap. This 1 minute fair value gap. So we're going to mark out this 1 minute fair value gap. Top right. 1 minute fair value gap. And so, anyway, we swept London's highs, and then we have this 1 minute fair value gap. So, which is also right above this 1 hour order block, right? So this would be the silver bullet model, where essentially we sweep either previous hours low or previous sessions high, or previous hours high or previous sessions high, which we swept, and then we break structure. Clearly, we had our market structure shift, right? This is our market structure shift. I guess you could call, there are a lot of different ways to mark the market structure shifts. I'm not the professional at market structure shift, but usually you just take the most obvious one. So this is a clear market structure shift to me, right? This is a clear market structure shift to me. So I'm going to mark this out as a market structure shift. So we're looking for a retracement into this fair value gap, into this order block, in between 10 and 11. If we can get it in between 10 and 11, that is optimal entry point. And we even better if we can get some kind of inverse fair value gap out of this level. Now, you'll also notice that this 1 minute fair value gap overlaps with this breaker block. So this is a unicorn setup too. So we have this breaker block, low, high, high, low, higher high, lower low. So you have this breaker block overlapped with this fair value gap. So breaker block overlap with this fair value gap. So this is our area for our this is the area we are looking for our retracement for an optimal entry point. Now I am trying to stick to inverse fair value gaps, but I will take this if we get it, because I am starting to gain a lot of confidence in my ability to take these breakers, to take these fair value gaps, because I have been essentially studying my butt off, and I really understand this stuff a lot. So this is a valid entry for me, and also just especially if I want to see a reaction off of it. If we can get a reaction off of it, I'll definitely want to take it, right? But also like if we can get an inverse fair value gap out of here, that would be sweet. So I might look for an inverse fair value gap too. But we would really like to see this retracement happen between 10 and 11. That would be ideal. But you'll know how, essentially, this is the clear drawn liquidity. Like, so clear, this is the drawn liquidity, right? So we'll see if we get our retracement. You know, we might not, we'll see. Maybe we'll sweep London's low and then come up. But anyway, we are looking for this retracement to happen in between 10 and 11. So it's not the end of the world that we're not getting it right this exact second. But we will see if we get this retracement. Yay, someone is sending hearts or messages. Hey bro, how's it going? So right now, I've been recently talking, you can go rewind the stream if you want, but I was talking about how this is going to blow your mind, bro. This is going to blow your mind. And it blew my mind too. So if I zoom in down here, you can see that at 20,232, we have relatively equal lows. And now this by itself is obviously, it's nothing. It doesn't mean anything. Who cares? I mean, yeah, relative equal lows are nice, but who cares? Well, these relatively equal lows are the exact same. Remember that number, 20,232.00. 20,232.00. These relatively equal lows are the exact same. The exact same. 20,232. As the previous day's low. So this is the daily candle, right? This is the daily range. It's the exact same. The daily candle's low is the exact same as these relatively equal lows. So, what are the odds that they're the exact same? It's like, what? And so this to me is the very clear drawn liquidity. Very clear drawn liquidity. And now I could be wrong. I'm still a trader and learning, but that seems like that is so obvious to me that that's where the market wants to go, right? Previous day's low and equal lows together. Maybe I'm overreacting, but I think that's a little crazy. So especially because it makes sense in the context of the higher time frame. So if I go out to the higher time frame, you can see that this is like a higher time frame weekly fair value gap. Right here, weekly fair value gap, and this is also a weekly breaker block. So we're pushing into the weekly breaker block, we're pushing into a weekly fair value gap, we're pushing into a weekly order block mean threshold. So all these things combined are telling me that this could be a New York reversal kind of day, or New York manipulation kind of day, sorry, where we push into the key level, right? This is kind of like the key level. Now I might have misdrew it a little bit, but we push into this key level, which is that mean threshold, right? And what I'm saying is this could be like possible silver bullet setup where we have London's highs got swept. We had London's highs got swept. We sweep into this order block mean threshold. Then we get our market structure shift. And this is our setup right here. This 1 minute fair value gap overlapped with this breaker block. This is our essentially unicorn setup, right? Where you have the breaker block overlap with the fair value gap. Now, obviously, nothing is 100% win rate, so it could fail. But I would honestly want to take this and just and take partials at the different lows, obviously. But like, I feel like this is the draw on liquidity for the day. We're gonna possibly go run London's lows and run Asia's lows. Now, I could be wrong, dude. I don't want to say this has to happen because anything could happen, but I start to get excited when I start to like connect the dots like this. Like it's like a giant puzzle, right? You're trying to solve a giant puzzle, and it's all in real time, and it's like the most exciting thing for me, you know. But we have this breaker block overlap with this fair value gap. We swept London's highs, so it seems to me like the draw on liquidity is lower. Seems to me like this is like a silver bullet model, and New York seems to be distributing down for me. So we have 8:30. So New York session is from 8:30 until 11. What does this seem to be? This final move up. This seems like this was the Judas swing. So a Judas swing is the move at the beginning of the day you get where it's like a false breakout in the wrong direction, right? So what you do is you measure this the manipulation move. So I'm getting tired. I'm talking so much. You measure the manipulation move, and you start to take these standard deviations, right? And these standard deviations give you projections on where the market might be headed. And I think it might be even better to draw it right here. Or I guess they're just projections, so they're not always 100% accurate. But you can see this one, this -1 has marked this low relatively. Then this -2 to 2.5 area is marking below these lows. So usually you want them to these projections to line up with certain draws on liquidity, certain key levels. In this case, this draw on liquidity is lining up with here, and then this -4 is lining up similarly to probably like Asia's low down here. So like we have Asia's low down here, marked close by to this -4. And actually, I should really add on here -4 to 4.5 because I've noticed that that's something a lot of people do is they do -4 to -4.5, and I think that actually that will make the context of this trade make a lot more sense. Yeah, the -4.5 is almost exactly at these equal lows. So the -4 to 4.5 is almost exactly. And I could be wrong. No, I'm not wrong about that. The negative people use the -4 to 4.5. I will go double check that after this video. But yeah, it's -4 to 4.5 standard deviations. So let's zoom in here. So essentially what we're looking at is in between 10 and 11, we want to see some kind of retracement into this area here. This, what's it called? This fair value gap overlapped with, we want to see some kind of retracement into this fair value gap overlapped with this breaker block. Now, obviously, it doesn't have to happen like that, but that would be our optimal setup, right? This silver bullet window is between 10 and 11 o'clock. So if we can see a pullback into this fair value, this is the most obvious fair value gap, and it overlaps with the breaker block, and we swept London's highs, and we got our market structure shift. So if we this is a 1 hour order block. So if we can push back into that level, that would really be what we want to see. Now obviously it doesn't have to hold. Obviously nothing has to happen, but that's kind of what I see today. But we'll see if we get it, because it could also want to go straight down. Now we did just take out London's highs, so this already we actually kind of already missed our entry a little bit, because Because technically, right? Technically, this we swept London's highs, right? And then we held this 1 minute fair value gap. So we got this market structure shift, and then we had this 1 minute fair value gap, and then we like this technically. You know what? We might have missed the entry because this technically is the first fair value gap, the first 1 minute fair value gap that held, right? So this technically is the first 1 minute fair value gap that held. But the thing is, with all this is I've been constantly right about the drawn liquidity. Like every single day I've been right about the drawn liquidity. I've just been struggling with my entries lately. Once I fine tune my entries, dude, once I get these entries down, we're going to be cooking up some trades, bro. We're going to be cooking up some good trades. And I mean, it's not going to take me much longer to fine tune these entries. You can see, like, if I had just been paying attention at this time, I would have been able to enter off this 1 minute fair value gap because we got this market structure shift here. So we had London's highs got swept. We had this 1 minute market structure shift. So you can see I'm really not that far off from getting these entries. This 1 minute market structure shift happened. We had a 1 minute fair value gap here. So a sweep, break in structure. A sweep, break in structure, and then a pullback to this 1 minute fair value gap. But once again, I don't think we missed our entry. We did not miss our entry because, for the silver bullet model, you need to enter between 10 and 11. So that means that this fair value gap is not valid for the silver bullet model. Now this is valid for your regular liquidity sweep, break and structure fair value gap model. But this is not the silver bullet model. So I'm just now remembering that. But anyway, this could have been an entry for someone who was taking some basic sweep, break and structure fair value gap model, and you would enter on here, stop loss above the high, and then honestly target London's lows, right? So target London's lows. I would definitely take partials through here, but target London's lows. And you can see how that would have been an amazing trade, right? And imagine if you had your stop loss above the fair value gap or something like that. That'd be 7-1. But realistically, you want to put your stop loss above the high. So you put your stop loss above the high. That's a 4-1 restore trade. So as you can see, once I fine tune my entries, bro, like we are going to be cooking some trades. We're going to be getting some really, really nice trades. And it's not going to be much longer before I fine tune my entries because I'm constantly right about the drawn liquidity. I'm nailing the draw on liquidity every single day. You can go watch my live stream yesterday where I called the draw on liquidity in live time. You can watch my live streams from the other days where I called the draw on liquidity in live time. There was one Tuesday where I was right about the draw on liquidity like over and over and over again. It was like I made a TikTok where I did a live stream recap and I showed how I was calling the market in live time, and I called where the market was gonna go. I called like 5 to 10 inverse fair value gap trades all in that one session. It was like crazy. Might have been like, I don't know. It was like 5 or 6 or 7 inverse fair value gap trades. So definitely go check out that TikTok. But yeah, dude, I'm sorry if I'm yelling. I'm sorry, but I'm just excited. This stuff gets me excited because you can see how this stuff isn't made up, right? This 1 minute fair value gap was this entry. That was definitely a possible trade of the day. And honestly, I would not be surprised if you could take this 1 minute fair value gap and target our drawn liquidity down here. These equal lows with this previous day's low. I would not be surprised. Now imagine if you had your stop loss. Imagine if you had your stop loss above the fair value gap. $27-1 risk to reward trade. Now I'm not recommending anyone ever take that because the risk you're taking on there is insane. But imagine if you could just move your stop loss to break even after this internal low, right? Then you'd really only be risking a 1-to-1, and then you just let the runners run, right? That's why moving your stop loss to break even is so powerful. Now, we have this 1 minute fair value gap. That could have been an entry for a regular person for market structure shift, for liquidity sweep, market structure shift, fair value gap entry. But like I said, in general, this will also be valid as well if we can get a retracement into this this unicorn, essentially unicorn setup where we have the breaker block, we have the fair value gap lined up here. We just took out London's low, so it's very possible we could get some retracement and pull back into this area for our setup. And honestly, I don't know if I'm that interested in just entering off of the breaker block itself. I want to see, honestly, some kind of inverse fair value gap out of that level, just because, I don't know, we'll see. I might just do an entry and then put my stop loss above the high, but I'm not an expert with these unicorn setups yet, so I'm not entirely sure if that's what I want to do, but I'm getting so much better with these unicorn setups, so I'm definitely considering it for sure. Anyway, there's a lot of talking. I kind of felt like I was yelling there, but my TikTok, yeah, it's just Jake Trades It. And yeah, it's like my like seventh, maybe like 10th video down, where I did that live stream where I called the market in live time. You could also watch yesterday's live stream, which I called the market pretty well in live time. Now, obviously, I'm wrong. I'm wrong too, but like, that's the thing with trading is you're gonna be wrong, and every day I'm getting so much better. Like, I've been doing these videos on YouTube for 3 weeks, and in the 3 weeks that I've been making these YouTube videos, I have been getting so much better at trading. Like, especially because I'm forcing myself to sit in front of the charts for over 2 hours every single day. I'm forcing myself to sit here and watch the market in live time using the stuff that I know. And I just get exponentially better every single day I do it. I mean, I really do. And I'm actually curious. We're going to check for an SMT here because this is perfectly sweeping London's low, and I can see this being an SMT. So 948, 955. 948, 955. So we got a lower low, and this is a higher low. Okay, guys. All right. So this is a low time frame SMT. I could see this being since we swept London's low, I could definitely see this being a low time frame market maker buy model, right? Where since we swept London's low, we formed this low time frame market maker buy model. Here, I'll show you what I mean. So we got our SMT at the bottom here. SMT after sweeping London's low, right? So what does this tell me? We have low resistance liquidity here. We have generated liquidity. I could see us pushing back up into this 1 minute fair value gap on the low time frame, somewhere in between 10 and 11, and then pushing down lower. So this is a low time frame market maker buy model within this high time frame market maker sell model. So this is the sell model, right? This is the market maker sell model, where the mean threshold here was essentially the key level we pushed into. So yeah, I'm expecting New York to be a distribution down here. But anyway, we'll see if this London low marks this low, and then we push up, and we have some kind of low time frame market maker buy model pushing back up into this unicorn setup. Now, obviously, I could be wrong. I can't be right about everything, but like, I don't know. This SMT is pretty telling. The fact that we got this SMT after sweeping London's low like this, it's very telling. Like, why did we get an SMT like so perfectly and generate this liquidity so perfectly after sweeping London's low like this? Like, it's too perfect, you know? Like, it's too perfect to just be random, right? So this was London's low. We swept London's low. We got an SMT. We're generating all this trendline liquidity. Let's see what happens. I mean, nothing has to happen for sure, but the fact that this is all so perfect, it's just weird, you know? Now, it could not happen like this. So seriously, like, if it doesn't happen like this, I'm just wrong. Like, you know what I mean? Like, so we can't, like, I'm not, like, don't be, I guess if it doesn't work, like, exactly like this, it doesn't mean that, like, I, it just means that I was wrong about something and I'm not perfect, you know? So London's low swept. Please don't lose my patience. What do you mean? I'm not taking a trade right now, by the way. I'm just basically tape reading, right? Was I losing my patience? I'm sorry. But yeah. Anyway. Yeah. Patience is number one, bro. Like, patience is so important. Anyway, we got this SMT down here. Here, see how this is a lower low? Anyway, yeah, this is a lower low. And this is a higher low, right? So, now it might change, it might not hold, but in general, like, as of right now, it's holding. So we're gonna watch it until it doesn't. Now it is interesting that we came up like this and on the S&P and we did not on the NASDAQ, but we'll just have to see. Sorry if I'm yelling, by the way. I'm not meaning to be yelling. I just get excited about this kind of stuff. So I don't know why you said please don't lose your patience. Was I getting upset? I'm sorry. I didn't mean to get upset. I'm just excited. But yeah. Like, I could be wrong about this, but like, it is crazy that we got this SMT after sweeping London's low. So it make a lot of sense to me to get this pullback into this 5-minute fair value gap, because this 5-minute fair value gap would essentially be the silver bullet entry, this 5-minute fair value gap. So price action is very clean today. It's very clean today. And so if we can get this 5-minute fair value gap to hold, that would be very, very cool. But yeah, we'll see what happens. It doesn't have to happen like this. It could be wrong. But like I said, if I'm wrong, it really doesn't mean anything. That just means I was wrong about what happened. But the thing is, if I'm wrong, then that I'll still be right about the bias, dude, which is the crazy part, because I know the bias is bearish. I know we're targeting these equal lows, right? So even if I'm wrong, I'm right about the bias, which is interesting. But we took out London's low, so I could definitely see us have a retracement. And it's important to note that this is a 1 hour fair value gap. So this is getting kind of messy, so I'm going to get rid of all the stuff because it's getting kind of messy. We might want to go sweep this. Oh, guys, we might want to actually sweep this 1 hour this 1 hour low first. I could see that happening, where we have to come down and sweep this 1 hour low first. Or maybe we just continue lower. It's very possible we continue lower, straight down. But like I said, essentially, if we get this pull back up in between 10 and 11, that would be a silver bullet model entry up in here. So we'll see, but we did just take out London's low. I'm interested to see, maybe we take out this previous hour's low. So previous hour's low. We might want to take out previous hour's low. But yeah, right now we're kind of just ranging. And what does that tell me? If we're making our accumulation range, that tells me that whichever way we go next is a high likelihood of being manipulation, right? So this is a range, accumulation. So we're sweeping out London's low here. Oh wow. So this definitely could be the manipulation move, right? Because we have this trendline liquidity. Although we have like this is the draw on liquidity in the long term. We have this generated liquidity in the short term, right? So this definitely could be manipulation. Now we are forming this 15-minute inverse revive gap, possibly. Not 15-minute, 15-second. So this would be a 15-second entry for Dodgy's model. Now, I'm not taking 15-second entries, but I'm just noting it. So I don't know. Maybe just take this with like a total grain of salt. But yeah, this 15-second. I'm curious. This is not a trade I'm taking, so I'm gonna put this on the screen. Not taking this. This is on the 15-second chart. But you can see that we have equal highs. No, we don't. No, we don't. Sorry. Oh, we have equal highs here. Okay. So we have equal highs here. So this is the short-term draw on liquidity. We'll see if this 15-second actually means anything. See, I wouldn't put much weight into the 15-second, but I do think this is manipulation before we take out these equal highs. But yeah, I guess I'll leave this on the chart because you could take this, right? So this you could take this. So like 1 to, I guess 1 to 1. I don't know. Well, I'm not taking that trade, so I'm not going to put that up there because it's kind of misleading if I have a trade pulled up that I'm not taking, right? I'm not taking that, and it puts it on the 15-second. It's just mostly like I'm recording it in my head right now to like understand like would this be a good trade in the future or would this not, right? And in my head, like I'm taking mental notes of like this 15-second inverse revive gap, like whether or not it means anything, or whether or not it's um, like maybe the 15-second when you get a dump like this, the 15-second, you shouldn't put a lot of weight into it, you know? So I'm constantly taking mental notes as I'm seeing price action live. I'm like, what's happening? And I'm getting a little bit better, right? So now I wonder if we're getting some kind of SMT. So yeah, we got this SMT, but it was such a low time frame SMT that it really didn't mean that much, right? Now this is a higher low. This is a higher low. Okay, they're both higher lows. So this definitely seems like a manipulation move, right? Because you get this giant range, and then you get this dump. Right, because here's the thing. Here's the thing. All right, think about it like this. This is London's low. Okay, there's a lot going on in the chart, so let's clean it up a little bit. Okay, we're just cleaning up things a little bit. Okay, so London's low was swept. So we swept sell side, and then so this was an external sweep. And then we have this internal sweep, right? And this is an internal sweep. So now I'm wondering, possibly maybe we get this push back up. Because this seems to be generated liquidity right here. Actually, you know what? I'm going to actually stop, because the thing with this is we might continue lower, right? Even though we're sweeping London's low, the draw on liquidity is lower, and a lot of time when the draw on liquidity is lower, sometimes you just continue straight down. But there's no really entry model right now or anything, so I'm not doing anything right now. So we'll keep this up for now. Because this is a 1 hour for value gap, right? Well, we might need to come into discount. before. Yeah, we're not even in discount of this move here. So I mean, I really do think that see how the previous day's low and the equal lows are just barely in discount. It seems to me like we want to come into discount because this is from this low to this high. These equal lows and previous day's low, the draw on liquidity is just barely in discount. So that tells me that the market wants to go to those equal lows, right? So I know that that's the draw on liquidity, so I'm just not so sure that we have to go run this right away. Well, I would prefer it if we did come to this 5-minute fair value gap. So yeah, I really do think we will come to this 5-minute fair value gap. I think we should come to this 5-minute fair value gap. Because this would be the silver bullet entry, right? 5-minute fair value gap. And then this is a breaker block. High, low, higher, high, lower, low. This is the breaker block. The thing is, we don't have to go back up there, right? We really don't. So we're just gonna watch the market and see. Because I want price to come back up there, but we might not get an entry. We might just keep going down. But we're 100% right about the draw on liquidity, which is cool. We're 100% right about the draw on liquidity so far. London's lows got hit. Anyway, we'll just keep watching the market, so. Yeah, right now we're just watching the market. I'm not gonna say I know for sure what's gonna happen at all, but we're just watching price action right now. Cause, like, yes, this is low resistance liquidity, but I have to understand that this doesn't necessarily have to get ran right away. Even though I want this to get ran right away, and even though I want us to come back up to this fair value gap and break a block, we might not. We might continue lower, and I have to be open-minded to that, right? Because honestly, I've seen it happen a lot of the time where the market just goes straight down to the draw on liquidity. It just like goes straight down, and that could definitely happen. We just go straight down. Like obviously, I want us to pull back to here, but we might not, right? Like the first 5-minute fair value gap that formed. So if I go to 10 a.m., so the silver bullet model is it says. The first 5-minute fair value gap. Wait, guys, let's get our facts straight. Let's pull up the YouTube video on silver bullet model, and we're gonna get our facts straight. So, silver bullet, we're gonna watch it together. Silver bullet ICT. Okay. So.
I'm a six-figure funded trader with over 4 years of trading experience, and in this video, I'm going to complete... trade is then invalidated.
Wait for 5-minute fair value gap to form in between 10 and 11 a.m. Let's listen to him say it, because I'm interested in him saying it.
Before we start looking for sells down. For a long started, so as you can see, prices swept the lows. Then we've got a 5-minute fair value gap. So tick number 2, tick number 3. The lows have been taken, so now we're looking for longs, and then we're going to look for an entry fair value gaps. Well, only candle number 2 needs to be bullish for a bull. So now also, in addition to this, on the left you can see I have London.
So
Session marked out with this indicator right here. Want the name of the indicator.
let's turn it up.
So as you can see right here, I've got 10 AM marked out, and I've also got 2 PM marked out. By 9:30, this is when we start looking at our setups, so we're going to start preparing ourselves for our setup. Now also, in addition to this, on the left, you can see I have London session marked out with this indicator right here. What the name of the indicator is just sessions. So all we're going to do is we're going to mark out our lows, right, our previous session lows. And as you can see, we have a massive build-up of liquidity right here. Price came down to this low 1, 2, 3, 4, 5 times. That's a massive build-up of liquidity. We have sell-side liquidity resting below these lows in the form of sell stops. So as you can see, price ran out of these sell stops and then reversed to the upside. So now following our checklist, we're going to wait for a 5-minute fair value to form after 10 AM. As you can see, at this point there's no fair value to form, this point there's no fair value to form, and so on until this massive candle right here at 10:20. Right, so as you can see, you have candle 1, candle 2, and candle 3 forming this fair value gap. As you can see, to the left there's no wick, to the right of candle 2 there's no wick. This is now a fair value gap, buy side imbalance and sell side inefficiency. Right, now another misconception a lot of people have is that they need to enter during the time window from 10 to 11 AM. Now yes, you can do that, but if the fair value gap has been created between 10 and 11 AM but not tapped into it and the trade is still valid, you can go ahead and still enter outside of that window right there.
Okay, so that was the most important part of what he already said.
AM. Now yes, you can do that, but if efficiency, right? Now another misconception a lot of people have is that they need to enter during the time window from 10 to 11 AM. Now yes, you can do that, but if the fair value gap has been created between 10 and 11 AM but not tapped into it and the trade is still valid, you can go ahead and still
Okay, the 5-minute fair value gap, guys. So this is the most important part. The 5-minute fair value gap, the thing with the silver bullet is, listen to him say this.
And go from 10 to 11 AM. Now yes, you can do that, but if the fair value gap has been created between 10 and 11 AM but not tapped into it and the trade is still valid, you can go ahead and
So the fair value gap that gets created between 10, the 5-minute fair value gap that gets created between 10 and 11, that is the key fair value gap to use. So that's essentially what I was looking for. So this 5-minute fair value gap would be ideal. Now, are we gonna go back there right away? I don't know. Like he said in that video, he said that we might not come back to that fair value gap possibly for hours, right? So it's possible we just like range down here and then come back to this fair value gap like way later on. Like this low resistance liquidity, it's possible it doesn't get taken right away. So we have to be open-minded here. The market, like I said, a lot of time it likes to go straight down to its draw on liquidity. And the draw on liquidity is these equal lows in the previous day's low. It's very clear to me that that is the case. We also, we're probably not going to get a break. We're probably just going to keep dumping. It seems to me like that is very possibly the case, right? So, if I take from this low to this high, because I bet you this is the low people are measuring from, you see we went to equilibrium. So we went to equilibrium of this range. So it would make sense for us to get some kind of retracement here, but we'll see if we do. We might want to come into discount and react off of something in discount of this range here. So this is a high, low, higher, high. This is kind of like a breaker block. It is a breaker block, but it's like, is a very good breaker block. I'm not sure, right? I'm not sure. Like right now, we're just kind of waiting. Price action is very slow right now, so there's nothing much going on. But you can see that the trade of the day so far was definitely this sweep of London high, So I'll show you what I mean. So London High got swept. So pushed up, London High got swept. We got a market structure shift here, and then this 1 minute fair value gap. This was the trade of the day today so far, and I wish I was looking at the charts at this time. But yeah, I feel like this would have been nice, right? So yeah, dang it, because you could see you clearly just put enter in this fair value gap, stop loss above the high, and then target probably London lows, right? So as we get better at this, we're going to be able to catch more and more of these trades. So like I said, I don't know if the market's going to give us a break. I actually think a lot of the time I notice that the market leaves this trendline liquidity for like way later on, and it keeps dumping and it keeps dumping, and it just doesn't give you a break until we get to our draw on liquidity. So we might not get a break until we get to our draw on liquidity. With that in mind, we're probably just going to keep dumping, honestly. So my main thing I struggle with is entries, right? I suck with entries, but I'm usually typically right about the draw on liquidity. And that's the frustrating thing. Like, look at this. This would be an 11.8 to 1 risk reward trade. Completely right about the draw on liquidity, but like, once again, I can be right about the draw on liquidity, but if I don't get an entry, like, it doesn't mean anything, right? It's very frustrating. But I guess you can see here that in this case, this entry would be off a 1 second market structure shift, 1 minute market structure shift. So I'm like, in my head, I'm like, what kind of market structure shift do I need for this, like, the sweep market structure shift and for value gap type model? And I'm pretty sure it's the 1 minute market structure shift, but you could also probably enter off like 5 minute. They all work, right? It's kind of just annoying. Like, it's just annoying to be right every single day, but yet to not really make money because you're always right. Like, I'm always right about the high time frame draw on liquidity. I'm consistently right about it. I don't think we're gonna get a break, right? Oh, we still left those equal highs. Guys, we still left. This is important. This is important to note. We still left these equal highs. And I believe these are like almost perfect. Wait, no they're not. What was I looking at before? I'm a little confused. I thought these were equal. They're not exactly equal. There's these, but that's not as high conviction, right? There's these equal highs, but they're not as high conviction. Dang it. Yeah, I don't see those. I think these are too far apart for me to consider like equal highs. Or was it these ones? Like, I wanted to consider these equal highs. Like, maybe you could consider them equal highs, but I think this is more of a sweep. This is more of a sweep and not equal highs. unfortunately. So I think because of this, like that's not really equal highs. So I think we're gonna have to. I think the market's gonna go straight down to the draw on liquidity that we have outlined here. As I said in the beginning of this live stream, that was the draw on liquidity. I said that was draw on liquidity. I said this was New York manipulation day. We were right about that, and we were right about, so far we're right about the draw on liquidity. It's just annoying to be right about the draw on liquidity like every single day, but whatever. But like I said, this was the entry of the day. Essentially, you enter off the sweep of London highs, market structure shift here. There was no silver bullet model entry because there's no fair value gap entry that formed between 10 and 11. Actually, wait, I could be wrong about that. There's this 1 minute fair value gap that formed between 10 and 11. Oh, wow. Notice how this 1 minute fair value gap was pretty solid. This 1 minute fair value gap formed between 10 and 11, and this held price incredibly well. Wow. 1 minute fair value gap held price very well. Man, it just sucks to be right about the draw on liquidity constantly, but then like not get my entries, you know. But like the thing about this is we're getting better every single day, and we're not taking losses right now. So, and we're watching the market. So, but yeah, we're right about the draw on liquidity like every single day. So. We are almost to our draw on liquidity. It's just kind of annoying, honestly, that we're constantly going where we think we're gonna go, but like we're not getting entries. And like I will get better at this, guys. I will get my camera's a little blurry. Hello. It'll fix itself. I don't even know what to say. Like, we're constantly right about the draw on liquidity. We're constantly right. But I will get better at my entries, and I will, like, it's just a matter of time before I pinpoint these entries. You can see here were two different entries, two different fair value gap entries that you could have taken. This also this inverse fair value gap entry you could have taken, right? So this inverse fair value gap at 940. So you could have taken this inverse fair value gap setup. Now it took out this low, so you actually probably would not take this. It took out this internal low, so you actually probably wouldn't take that. And you would not really have a place to move your stop loss to break even, so you probably wouldn't take that. But the point is, like once I fine tune my entries, we're gonna get some crazy trades. Because once I fine tune it, it's gonna be something. It's going to be a little unbelievable. Because look at these entries, right? Once I fine tune my entries, it's going to be nice. we're almost to our drawn liquidity, so. But it's exactly as I said it was going to happen. Besides the fact that I said that we were going to come back up to this unicorn setup, I was wrong about that. But I'm consistently right about the drawn liquidity. So that's honestly what matters. And I didn't take any losing trades or anything. So. Whoa, my one setup for life video got like way more views than normal. This trading setup is the only trading setup you need to know in your entire life. Let me explain. It has an incredibly high win rate and repeats almost every single week. The first thing you need is a high impact news event. Go to forexfactory.com and find out when a high impact news event. Dang, it got way more likes than normal. This trading setup is the only trading setup you need to know in your entire life. Let me explain. It has an incredibly high win rate and repeats almost. You need to. Oh, I got a message request. Alright, I'm gonna send this guy the Discord link. If you want to get better at trading, you need to put in the screen time. This guy just said, trading is all baloney. Bro. After you've been in the market for long enough, you really just... It becomes so clear that the markets are just, they're not random. They're not. I mean, especially when you understand, like, drawn liquidity. Like, this is the drawn liquidity. This is where I said the market was going to go from the beginning of the day. Okay, so we are getting some movement back to the upside. We are getting some movement back to the upside. So I'm interested, actually, possibly, to see. Okay, so this fair value gap might hold. This fair value gap might hold. I'm interested to see if this was in premium. Was this in premium of this range? No. Was it in premium of this range? It was. This fair value gap might hold, guys. Just we'll just watch it and see what happens, but this fair value gap might hold. No, it might. We'll see. We'll see what happens. Nah, it doesn't hold. So you see, yeah, it looks like it's inversing now. So, or maybe it will hold. Just watching. That's not my entry model though. So you have to understand that that's not how I trade. Okay, yeah, like I said, so, okay. The wicks do the damage, the bodies tell the story. You see how the bodies are holding this for value gap? Yeah. Yeah, I think this might hold here. So actually, if we can get, so this is delivering from a 1 minute for value gap. If we can get this 2 minute inverse, this is I will enter here. This 2 minute inverse I will enter. Delivering off of this 1 minute for value gap. And we are in premium. We're in premium of this range. Yeah, we're delivering off this 1 minute for value gap. So we're delivering from something. The bodies tell the story. The wicks do the damage. 2 minute, possibly about to inverse. We got 54 seconds until this 2 minute inverses. $45. We don't want to take out this internal low. We want it to close below this low, but not. We want it to close below, but not close below this internal low. 24 seconds. Now this is following all my rules, so if this doesn't work out, that's fine, but this is following all my rules. Okay, 8 seconds, 5 seconds, 3 seconds, 1 second, okay. So, stop loss above this high, and then take profit. Stop loss to break even at this low here. Stop loss to break even here. You move your stop loss to break even here. That's so important. Very, very important. You move your stop loss to break even here. Very, very important. This is critical to move your stop loss to break even here. And if this doesn't work out, that's fine. I followed all my rules. I don't care. But like I said, I followed all my rules. If this doesn't work out, I don't care. But Stop loss to break even at this low. That's so important. Stop loss to break even at this low. And then we will let it run if it runs. If it doesn't work out, I followed all my rules. But I'm going to put TP1 here. I will put but you'll notice how we went into premium here. We went into premium. This is why this was such a good trade. We went into premium just barely, respected this 1 minute for value gap. The bodies respected this 1 minute for value gap. We got this 1 minute inversion. So that is why this trade is so good. We just barely went into premium, right? And so anyway, stop loss to break even after this internal low is hit, and then this trade is risk free. This trade becomes completely risk free if we can just take out this internal low. Hopefully we get there. We'll see. Because like I would put TP2 at Asia's lows, right? But like I said, if this doesn't work out, that's fine. I followed all my rules, so I'm not gonna be upset if this doesn't work out. I followed all my rules. It is what it is. If it doesn't work out, it's fine. The only thing is, we are far in discount, but this was in premium of this range, right? So we were we were pretty far in discount. We might have been too far in discount, but we'll see. We'll see. The bodies held this 1 minute for value gap, so we'll see. Now stop loss is above both of these fair value gaps, so we'll see if these fair value gaps hold. We will see if these fair value gaps hold. Once again, I'm not going to be mad if I get stopped out here because I am following all my rules. It's all just probabilities, so if we get stopped out, that's fine. But I followed all my rules, so I'm not going to be mad. Followed all my rules. There's nothing. When I take a good trade, there's nothing to be mad about. Now, the only thing that might not be so good about this trade is we're a little far in discount. But in general, we were in premium of this range, right? Which gave me the conviction to short. We went back into premium of this range. So we'll see. Once again, I'm okay with whatever happens. Followed all my rules, so I'm not upset if this doesn't work out. Followed all my rules. And if we can get this low, then stop loss to break even. If we can get this low, then stop loss to break even. Okay, stop loss to break even now. It's very critical you move your stop loss to break even because if we're gonna run here, we should not stop. We should not stop. And we just hit RTP1. So we already made profit on this trade. We got to figure out where we want to have TP2. We got to figure out where we want to have TP2. So TP2. We could have it at Asia's low. Yeah, I think Asia's low is fine for TP2. So I'm going to put TP2 here. Even though they're close together, I'm fine with taking some more off at Asia's low because Asia's low is a significant draw on liquidity. And so I don't mind taking more off here. Now 20, let's figure out exactly where it is because we don't want to mess this up, right? $20, 01, 20. So Asia's low is right here. Like if we're gonna run here, we should run because this is an order block, so we should not stop here. Like you have to understand, like this is why we move our stop loss to break even. If we're gonna run here, we're gonna run. So let me move this trade out so you can kind of see what I mean. So, where's our draw on liquidity that we've been looking at for the longest time? So this is really the draw on liquidity, and this is where I'm targeting. I'm going to get rid of this range now. So TP2. TP3 probably like right here. I don't know why I'm having so many TPs, but I guess I just feel like it with this trade. Okay, TP2 is hit. Yeah. So we'll see if TP3 gets hit, and then I'm trying to figure out, do I want a TP4 or not? Are these equal lows? Are these equal lows? Actually, no. I take it back. TP3 at these equal lows. I'm gonna take quite a bit more off at these equal lows. I will take two. I'll take basically double off at these equal lows, and then and I'll leave one runner. Trying to figure out how much to take off right here. But yeah, this is the final target, right? Yeah, I'll take two more off here at this TP3, and then I'll leave one runner for the final target. So. I'm taking two more off here. Okay, there we go. Okay, took two more off. Then we got our last runner at TP4. I'm responding to that trading is baloney guy with a freaking video of this. This is awesome. So I'm just making sure that these are equal lows, right? But the previous day's low seems to be the clear draw on liquidity. Just double checking here that these are relatively equal lows, because it's important. If they're not, oh wait, did we already hit it? 12,232. Wait, guys. Did we hit previous day's low? Was that it? I'm so confused. Wait. Yo, where's the I believe it was 12,232. But why? Maybe I'll take more off here because I can't figure out where those equal lows are, honestly. Previous day's low. Okay, it should literally just be. Should literally just be yesterday's low, I assume. So I am so confused. What did I see earlier? Because this is not previous day's low, clearly. Oh, oh, it's today's low. Oh, it was today's low. It was 20,232. We already hit it. It was 20,232. We already hit it. It was these lows, 20,232. It was these lows. We already hit it. Okay, I'm taking off more here because we already hit our daily objective. This was our daily objective, so we will take off more here. So yeah, okay. Good trade. Good trade. Very good trade, dude. Woo! I'm pretty sure we'll have to rewatch the stream and see, but 20,232. Wow. Okay. What was that? A 4-to-1 risk reward trade. On stream, live. You watched it here first. 4-to-1 risk reward trade on live stream. There we go. Let's go. 4-to-1 risk reward trade on live stream. So, it is 9 o'clock and I just finished my trade, so I am going to call it for the day. I'm gonna be done with the live stream, but I hope you guys enjoyed this. This was possibly my best live stream ever because I called that in live time, 4-to-1 risk reward trade, and you guys saw me do it. It was scary here, but I followed my rules. I held because we had conviction. This was not stop loss or break even until we took out this internal low. We had conviction, and I followed all my rules. What a great live stream. So if you enjoyed this video, definitely consider leaving a like, subscribing, and I will see you guys in the next one.